Bitcoin's future has never been more uncertain. Since the birth of the king of crypto in January of 2009, the world has learned a lot about how markets will value Bitcoin given a variety of macroeconomic conditions. In this video, I'm going to issue a warning to you all that reflects my personal opinion on the future of Bitcoin. I have jam-packed this episode with ultra important information that lays out how I arrived at that opinion, and you don't want to miss that. So strap in tight and let's get into some info like never before. But before we do that, make sure that you smash that like button, make sure you hit subscribe, boom, bang on that notification bell, comment anything that you want in the relevant sections. I appreciate it. Now, let's go see what it is that they've been hiding from you in plain sight. So far in this series, I have shown you all of the history of the US equities market by analyzing the price movement of the S&P over the last decade or so. Then we cracked open the inner workings of the crusty old US central bank system, known as the Federal Reserve, to reveal just how much whacked out spending that they have been doing since 2007. As a refresher, the Fed's balance sheet currently sits at just under $9 trillion worth of US treasuries, and when the housing market of 2008 collapsed, they cut their federal funds rate down below 0.25%. These two powerful interventions by the Fed's overpowered economic bazookas have brought the US economy out of the 2009 recession successfully, but the Fed did not stop there. Why would they? They kept rates extremely low by historic norms and kept printing dollars to load up on more US treasuries all the way through early 2022. Well, that brings us up to date on where we are now. And it has only taken 4 episodes. There's only one phrase to describe the situation that the US economy now faces, and that phrase is high inflation. In March of 2022, the Fed throttled the US economy by increasing interest rates, and they only started to decrease the rate of those rate increases weeks before this video was actually recorded. But understand that while we are decreasing the rate of interest, rate increases, they are still very much increasing rates. That was a mouthful, but I hope that makes sense. If not, rewind. Now, you might be thinking, Drew, I thought you said that if the Fed raises rates, then that actually slows growth. Why would they do that? Well, first of all, good on you for remembering that. So go ahead and treat yourself by liking this video. But also, this is where the high inflation part comes in. High inflation basically means that the same amount of dollars can buy less and less every single year. Or put differently, it's more dollars chasing fewer goods. And by the way, you're getting poorer every single day because of this. Now, the Fed can't control the supply side of the inflation equation, right? The Fed can't tell Walmart and Walgreens to make more stuff to reestablish the balance, but the Fed absolutely can alter the demand side of the equation. The Fed fights the higher prices of goods in the system by raising interest rates so that spending slows down. Remember the example I made in the last video when I mentioned that if the rates are low, more people buy new pools, and if rates are higher, fewer people want new pools? Well, this is exactly that phenomenon. The Fed can effectively control the quantity of goods on the market by de-incentivizing you and me from spending our money and taking goods out of the market. That allows warehouse and store shelves to fill up with more goods, and all of those goods become less scarce and instead more abundant. So that is what the Fed is doing with one of their bazookas, but remember, the Fed has 2. The Fed is also starting to clear off its balance sheet. This means that it is selling those treasuries that it accumulated since 2007. The Fed is motivated to do this because this effectively takes dollars out of circulation and replaces those dollars with internet-based IOUs that can be cashed out in the future. I hate to get so far into the weeds with these economic concepts, but first off, if you are going to be investing your money, you should really know about this stuff. Also, I make sure you understand these concepts before I move on to my conclusions so that you know how I got there. But the important thing to realize here is that the Fed is firing off its big ass bazookas now, but in reverse from the direction that they were firing them before. Bitcoin is now moving into uncharted territory, at least as far as the macro environment is concerned. Bitcoin right now is kind of like a new creature that has spawned into a wild jungle. And although odds were working against that creature at first, it was actually able to survive and thrive in that jungle environment. But now that environment around that creature has completely changed, and now a desert has formed where the conditions are going to be even harder to endure. And the question now becomes, sure, the creature can endure the jungle where the prey is plentiful and there is plenty of cover to hide from predators. But can this creature survive the desert where there is less prey and less cover? Sure, Bitcoin can survive while the Fed has economic growth in the model, but can Bitcoin survive when the Fed starts to turn the economy into contraction mode? And that's where we are now, guys. Sadly, I don't know the answer to that question. Nobody does. But I can speculate that we have been in a 13-year global bull run, and now we are potentially entering a few-year bear market. Now, sure, some people have stronger beliefs and better or worse track records when it comes to making predictions, but nobody truly knows. So then what? What should I do? Well, when you're about to go through a major change, you have to look at the history. If you are the creature that made it in the jungle and now you yourself are in the desert, you might ask, how have the other creatures survived in the desert? Thankfully, there is a wealth of information about how to endure periods of contraction in economies. So this is the first time we've been here. Investors have been preserving capital for thousands of years, and the answers are actually pretty simple. But before we get to the answers from history, let's take a deeper dive at what Bitcoin is and why it is not the answer. Why is Bitcoin not the best asset to invest in 2023? After all, it was supposed to be a hedge against inflation. Bitcoin was supposed to zig when the equities market was zagging. Bitcoin was also supposed to be unhackable. The good news is that while Bitcoin has not only never been hacked, the blockchain has also not suffered any downtime, unlike coins that are much less likely to survive the bear market, like potentially Solana. The bad news is that crypto bridges or connections between blockchains have been a major point of failure for crypto security. Hundreds of millions of dollars worth of crypto has been stolen from bridges in one super complicated way or another over the course of 2022. Now, again, while this has not diminished the integrity of Bitcoin's actual blockchain, its reputation has absolutely been destroyed in the eyes of those who can't make the distinction between Bitcoin's blockchain and crypto bridges. And you might say, screw those guys. If someone doesn't want to understand the truth about solid blockchain tech like Bitcoin, then they don't deserve to reap the rewards of it, right? But I say no. The truth is that we need public perception of Bitcoin to be as rock solid as its blockchain, because adoption is literally the only aspect of Bitcoin that makes it inferior to dollars, euros, or any other fiat currency. But the reality is that USD has a big lead on the adoption aspect of the cryptocurrencies. But not all hope is lost for Bitcoin, and that is for sure. And this I assure you. Bitcoin has been through at least 3 major bear markets during its short life, and each time it came back stronger. Now, that was during a 13-year bull run in the rest of the equities markets. If the history of Bitcoin is any indication, then when Bitcoin recovers from the next bear market, it might actually easily hit multiple hundreds of thousands of dollars in value per Bitcoin. But remember, while Bitcoin proved itself in an environment that was favorable, it has yet to prove itself in one that is not. My warning is simply this. Those that remain bullish on Bitcoin for the midterm might be a little foolish. Not because I don't still believe in Bitcoin, because I don't underestimate the road ahead of it. And in the next episode, we will discuss just that. But tell me, do you think I'm being overly gloomy on the future of Bitcoin? Do you think the Fed's rate hikes and balance sheet reductions will keep the Bitcoin prices down? Is crypto still on your buy list during the looming recession? Time will tell us all the answers to those questions. And if you want me to answer that question for you, make sure you show up to the next video. And if you like content like this, make sure you smash that like button. Make sure you hit subscribe. Boom! Bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.